Identifying investment themes for the third quarter. That is our topic for today. Welcome to Power Charting. I am your host, Bruce Frazier. We have some amazing emerging investment themes and also some that arguably are in need of a rest. Let's have a look, see if we can identify what's coming and what is pausing. And to get started, I do want to bring your attention to the new features at stockcharts.com. They are amazing. Sharp Charts is only getting better. There's going to be version 3.0 very soon. You can preview it right here on the stockcharts.com dashboard page. Check it out. Check out all the new technologies and features that are coming. They're phenomenal. And there is a very special summer sale going on right now. You can lock in your rate and keep it for as much as a year, I do believe. And I had a dear friend who is a very prominent trader who told me just the other day that Stock Charts is one of the very, very best charting platforms for the money available anywhere. And I couldn't agree more. So please take the time, check out the new features. You're going to be very excited and lock in some very good rates for the coming year. And with that, let's move on, get started. We are going to have a look at seasonality to begin. The first half of the year, we have shown you the seasonality chart before. These are pre-election years only. All the pre-election years in the database. Thank you, seasonax.com, for allowing us to show this. And the seasonality was quite strong up into the beginning of July of this year. Well, we're in July now, so how did it turn out? Pretty darn good. So seasonality really, I think, set the tone for how the year would turn out, or at least the first half. And we can see that right into the beginning of July, we have a bump up to a minor new high in the year in a torrid pace for the NASDAQ 100, the NASDAQ stocks, the S&P 500. It's been a very interesting and positive year for the market. So, and this seasonality tool worked so well last year also. What's ahead? Well, look at what the indexes portend for how the year could go into as far as November. Looks like a trading range, sideways action. Well, that tells part of the story, but is there another story underneath the surface to be told? And let's go into that today with our look forward at the second half of the year. So let's start initially with an update on the fear and greed. July 3rd, right at the beginning of the third quarter, there was another bump in the fear and greed index up to a reading of 85 out of 100, pretty far up. That shows that there's a tremendous amount of optimism in the marketplace, which can have the effect of pausing the market, but maybe it pauses certain segments of the market, and other segments which have been underinvested, ignored, might be ready to keep going. So note that back in September, at the end of the third quarter of 2022, extreme fear was reigning at that time. You can see the red chart on the bottom and the yellow dot, which shows that is September, October lows. Immense amount of pessimism back then. The markets have had a great tone ever since, rallying right through the end of the year and the first two quarters of this year, and to a point where now we have quite a bit of optimism in the market. An anonymous trader once said, the stock market is nothing more than fear and greed superimposed on the business cycle. So it's very important for us to keep an eye on these sentiment readings. What does this mean for how the markets could turn out? Well, the torrid pace in the stock market has really come from the mega cap growth stocks. Here we can see the triple Qs, which is the ETF trust for the NASDAQ 100 stocks. They are the dominant stocks in this index. Note the big, beautiful accumulation structure that formed really going all the way back into the middle of 2022. An accumulation formed. We can count that with our point figure horizontal technique. A phenomenal pivot formed and what we call a catapult wall that lifted in the beginning half of 23, the Invesco triple Q into a torrid advance that now has gone all the way up to the March, April highs of 2022. And this is an area right here of resistance. And this is where we are at this time. Does that mean that the move is over? Well, there's actually a slightly higher objective minimally, and maybe even as high as 420 that's available in this count structure. And note, we're only counting the first half or the first segment of a larger accumulation structure. So this larger structure actually argues for higher prices even further up ahead, but we can't tell the amount of time that a move takes. We can only see potential objectives. And in this particular case, it wouldn't surprise me if somewhere between these two boundaries right here, we have a pause. And this pause, which is very close overhead, could be a pause that refreshes for higher prices. Time will tell. But in the meantime, does that mean that it's over for the markets? Well, no, I would argue that there is some great potential out there. Let's look at semiconductors for a minute. Semiconductors have been an amazing performer for literally since last year. And you can see this incredible uptrend. I'm going to take a pause. I'm losing my voice. I'll be right back. I am back. That was just an excuse to get a big swig of coffee so that I could get a jolt, so that I could keep going here. So this is the semiconductor ETF. Look at the upward stride of this advance. It shows up beautifully in our point and figure chart. This is a one box method chart, which has swing trades, starts in 2022. Notice these beautiful counts that we get, which give us jumps and pauses, jumps and pauses. The current count gives us a run up to 160, 168. You can see here that we are now overbought above the top of the channel. And this is a condition that could blow off, get up to that 160 level, which is just up here at the top. Oh, I lost my little marker, but gets us up to the top here. And so 160 is right up here. And then, but it could go as high as 168, have a big climactic surge. But again, this is one theme that's been very dominant that very well could need a pause to refresh for further higher prices. And so let's keep that in mind. Here's another, I think, very, very useful semiconductor ETF chart. This is the SMH, as was the prior. You can see the upward stride. This is actually 2018 up to 2020, and you here, or 2021, I should say. And this is a modified point and figure chart. These modified charts, point and figure charts, are so durable. You can use them in a lot of different scales, different box reversal methods, using 3-box method here, but 4-point scaling. So we've doubled the scaling so that we can see more data. It's a chart that has less columns of X's and O's, easier to count. Look at this distribution count. Goes exactly down to the 84 lows. It misses it by 1 box, shows us what the potential of the top is. And then you can see the downward stride. It then builds a count, breaks the stride, the downward stride, and look at the catapult wall that takes this right back up to the highs of the prior bull market peak. Let's count this. And so this count here, again, using 4-point scaling, we have fewer columns to count, but we multiply by a bigger scaling factor, gives us a count that takes us right back up to the prior highs at that 156, 160 level. Note that this last chart that we just looked at also took us up to this count area, two different counts using different methods, where we broke down this upward catapult wall on this chart. We see the internal swing counts on the way up, and we're able to draw the upward channel. Both lead us right to where we are now. It makes perfect sense for the semiconductors to find resistance at the bull market peak from 2021 and pause there, build additional count. We will just watch and see. For the time being, the trend is still up for the semiconductors. They're acting really, really well. And we will just keep following the trend higher, looking for the cues that tell us, using our classic Wyckoff and tape reading skills, that stopping action is in place and time is needed to rest. Now, let's turn our attention to one of the very cool new features in stock charts. And please go check out all the wonderful new features that are available, that are coming or have already arrived for stock charts, because you're just going to like them. They're phenomenal. And also lock in those rates that are available right now for the summer sale, and lock them in so that you continue to get this great value that's available in stockcharts.com. So this chart is a 2-month chart. It's color coded. The blocks in the market carpet, the bigger the block, the larger the market cap of the company. These are basically the S&P 500 more important stocks in the marketplace. And you can see here that there are many, even the itty bitty little tiny blocks there are big important companies. But this gives you some scale or sense for how the mega cap growth stocks have just become the big dogs in the market these days. And look at the color of the 2-month change. Now, I'm not even doing the year. I'm just doing the last 2 months, and this is through July 11th. You see here, the dark green are the stocks that have had the best appreciation. And note that most of the dark green is the mega cap growths. Nvidia up 58%, Avgo up 42%, Microsoft up 15.5%, Apple up 14%. These are phenomenal first half returns for these stocks. Now, cast your eyes on these other smaller blocks and note that they're organized by sector. This is so helpful to us to be able to go in and identify these different sectors, because note that the lighter the green or red implies or absolutely measures the fact that these stocks have performed less well than the super big stocks. So I contend that what's going to happen in the third quarter, and we've talked about this in prior episodes, I contend that rotation is going to occur as institutions absolutely positively have to raise some cash away from these mega caps, because they've appreciated so much that they have grown as a weighting in their overall portfolios. And they already, in many cases, these institutions have over invested in them so that they can compete successfully with these cap weighted indexes like the S&P 500 and the NASDAQ 100, the benchmarks that they are judged by. And different managers have different benchmarks, admittedly, but for the stock side, they're all being judged against these cap weighted calculations in these indexes, which is a little nutty, but That's just the way it is. And they want to beat the S&P 500. They want to beat the NASDAQ. And so they will overinvest in these big companies that are super outperforming. So they have to sell down in the third quarter. They would wait until the second quarter was done because performance was so good. That is one of the main reasons that the indexes closed the end of the second quarter right there at their highs. So once the third quarter starts, these institutions start to peel off some of their stock ownership in these areas. They're not going to sell all, they're not even going to sell most of these stocks. They're going to sell little bits, but the market caps are so big and they're just going to pare them down to their prior weightings in their portfolios. But their market caps have grown so much in the first half of the year that selling those stocks down to their prior allocations is going to raise lots of cash because they're so big. And so where's that cash go? That is the theme for power charting for this week and the weeks to come. So I believe that what we're going to see is a migration out of these super big blocks into these smaller blocks where there's a tremendous amount of value and there's growth potential and there's dividends. So you can go to areas like industrials and energy and utilities and real estate. You can see that they've been waning, that they have been ignored somewhat in the first half of the year and you can see it in the block size and the color. Now, none of these are going to get as big as the mega caps. It's just not going to happen. But that doesn't mean that they don't get bigger and they don't become more important. Well, let's move ahead. And now we've just looked at 2 months. Let's look at just 2 days. Now, this is through July 11th. So I just think this tells a very interesting story. And the story is look at the big blocks. Look at how they did over a 2-day period in the new quarter. We're in the third quarter now. These institutions would be interested in raising some cash away and moving it into other areas of the market. We'll look at the color change. Now, this is only 2 days of data, but it tells a story. 2 months versus 2 days. And here we see these gigantic blocks are leaking. They're leaking into performance-wise into the smaller blocks, which note that the smaller blocks on the majority, on balance, are green. So what does that do to the calculation of the indexes? What does that do to the NASDAQ 100 or to the S&P 500? It's going to show these indexes are in a range-bound condition or maybe even going down because these big stocks have such an influence on the calculation of the indexes. But what happens is that the money flows. It doesn't go out of the market necessarily. It goes into other value areas of the market, which are the green areas. And so that is a visualization of rotation. And so we see the rotation flowing towards these other areas of the market. Well, I asked this question: what happens in the third quarter if these indexes just languish and go sideways, or maybe even have a little bit of a downward tilt to them? But what happens if underneath the surface there's a whole large list of wonderful companies that continue to rally in the third quarter of the year, maybe into the end of the year, and they are masked in their positive performance by the large caps languishing for a period of time? And like I said, we have point figure counts that suggest that higher prices are ahead for these big blocks, for these big cap names, but do they need a rest? And does that mean that there's going to be nothing to do for the traders and investors in the second half of 2023? I believe that this very chart right here shows us that there is the potential for us identifying rotation to benefit from the rotation into these other terrific companies that are not as big. So let's be paying attention to the evidence that suggests we're going to continue to see rotation in this direction. Let's keep testing for that. And here in a minute, I will show you how to do that. And I know you have ideas. These are just some suggestions that I would have about how to proceed to find these great winners going into the second part of the year. So here are the sectors. I just want to point out a couple of different sectors at this time. And you can see here, technology, for instance, is right here. And technology, look at the relative strength. This is a 6-month view, acceleration up. Already technology appears to be trying to pause, maybe pausing like here and here for another run up. Time will tell, but the very well could be that technology does need a rest. But look at industrials. Look at this hinge that formed in the second quarter of the year. Industrials have just had a wonderful liftoff and have jumped suddenly. All of a sudden, they're showing leadership. Look at the relative strength. It's on a rising trend now. Another one is discretionary. Discretionary is just had a gigantic, big, beautiful structure across here and is now in a rising trend. Could be great candidates there. Now, a little premature, look at the relative strength in healthcare, still down, but there's this hinge forming. We will be watching healthcare for that hinge to resolve itself. And if it resolves itself in an upward direction, that's going to be very interesting. Utilities are also in a hinge. Now, look at financials. Financials are making higher lows. So this is very interesting. We will watch for relative strength to confirm by turning up. Now, one of the super interesting areas, I believe, is a prior bull market leader, which was energy. And note, energy is in a downward stride, but has been making higher lows since March on the sector ETF here. And the relative strength appears to be threatening to turn up above its downward trending moving average. So energy is a very interesting place. Now, let's just go back for a minute and look. Here is energy. Now, this is the 2-day view again. Look here. Look at what energy is doing over the 2 days, again, around July 11th. Look at materials. We didn't even look at materials on there. But materials has got a big swath of green. And another area, communications is kind of a mixed bag because there are the big blocks, Meta, Google, and so on, but there are other communication stocks that look pretty good. Now, industrials, it's almost universally green. So is industrials one of the really hot themes for the third quarter? Time will tell. Here's healthcare. Healthcare is a very big, important area of the market. And look at what the story is in that big block there. So let's keep an eye on this and see. Let me show you. Here is materials right here, attempting to rally above its downward trending moving average. Looks like a big basing structure, countable for higher prices. And let's see if materials can get ahead of steam going. Okay, so there is a view. This chart is really fascinating. This is and I got to keep track of the time here. This is the Mega Cap Growth ETF, MGK. So Vanguard Mega Cap Growth. So it basically focuses on the top. It's not just the top few mega caps. It's a larger list, but they're all really big companies. They're all growth companies and so on. So it's a great ETF for us to track and keep an eye on. What I've done here is a relative strength study to the S&P 500 equal weight, where every stock in the S&P has an equal weighting and not dominated by market capitalization calculation. Here is the beginning of 2023 over here. There is a beautiful upward stride to the relative strength of the mega caps, as we all know, in the first half of the year. And at the end of May, beginning of June, we have a throw over of the top of our trend channel, which is calculated on these lows and that high. We also drew a parallel on that high. There is this great stride going on and a throw over, overbought throw over condition that occurs right into the last month of the quarter. It continues to pause. There's a more important reaction that occurs in early June, and then a test, a secondary test of the throw over back into the channel in late June, which is, I think, sort of the last gasp of the leadership of the mega caps to the typical stock in the S&P 500. Keep in mind, the 500 are the most important large cap names in the marketplace as a general rule. And so now we have a downward stride moving towards the bottom of the channel. So is it a case where this is demonstrating in the new quarter that exhaustion is occurring for the relative strength of the mega caps to the blue chip, calling the S&P 500 blue chip stocks in equal weighting? This is one for us to keep an eye on and follow. And with this, one last chart I want to look at is, here are 3 swing trading counts. These are one box reversal. These are areas that I identified in the sector look that we just did, and they are, let's start with discretionary on the bottom. Discretionary is absolutely on fire. This, I think, shows that consumers are getting healthier again. They're confident, and they are starting to spend money on discretionary purchases, which are things like washing machines, automobiles, cruises, and so on. So go in, you can look at the individual stocks in the discretionary area, but I like the way that this is showing great leadership, which I think is signs of a confident consumer. Energy, top left, is very interesting because note the downward stride of the energies is starting to wane. Higher lows since this area right here, and a swing trading count. There's actually a bigger count that goes over to here, but this count goes 94 to 97, currently around 83, 84, and this count is just breaking out. So this is when it becomes a real interesting swing trading point, and we would watch for the ability to rally, show relative strength as it goes up higher from here. And then this becomes a target zone. This is 91, so it could get above that overhead resistance. Industrials on the top right, very fascinating, one box reversal, swing trading count. You can see here that this counts up to, from a breakout level, look at this beautiful reaccumulation zone, breaks out at 102 and counts up to 111, 113, and then 128, 130. So a really nice 2-segmented count, swing trading count, that shows the industrials will appear to be just getting started in a potential rotational way into a leadership posture. So that's very exciting also. And then let's have a look at oil service. These, I believe, could be the more interesting area of the energy sector, because oil service is an area that does international business. Wherever they're exploring and producing oil in the world, these oil service companies are in there working with these producers. This is a hinge. It's a beautiful structure. I have 2 segmented counts here, and this, as you can see, is a rather large count, but again, one box reversal swing trading count that we see, and it comes out of the hinge and then just goes right into a beautiful upward stride. So the near-term count 328 is very nearly reached at this time, but that is in the area of these prior highs, a place that might cause a pause, may not. And then we have much higher prices still ahead in the second segment of this advance. So I think hinges are always very exciting because it shows the absorption of stock when it becomes dull and quiet into the conclusion of a structure. And then when it gets going, if it truly was absorption, that shows the stocks are hard to buy. Note the just the incredible jump that's taking place right there. And then with that, I just want to conclude with this slide here. And what I've done is, this is just a cool thing you can do. Make a list. You can do it by actually using the scanning engine. Very simple to do. This is the 500 S&P 500. And what I do is I rank them by scooter. It's so simple. Rank them by scooter, and then I rank them by sector and industry. So I click on the scooter first, and it gives me the scooters, top scooters, and then you click on sector, and it puts them in order of their sector by scooter. Then you click on industry. Now we have each industry in its sector ranked by scooter. Scooter is momentum. And now we can see all of the different industry groups in the S&P 500 and look at them by their relative rank of performance. Now we can see best performance to worst. And you have this list. You can go through it and you can make charts of these different stocks. And I've actually made one here. This is Fleet Core. And you can see a scooter of 88 in Fleet Core, very strong, and it's in an upward stride on a weekly basis. The relative strength is also in an upward stride, and this looks like it's a merging relative strength, possibly a new theme. Appears to be a base forming here, and so just a way for you to be able to break down the S&P 500 in a very effective way by relative strength, by industry group. And with that, I'm going to leave you with have a great week. We will dig in more into these sector themes and industry group themes that are emerging and resting. And with that, thank you so much for being here, and we will see you next time on Power Charting.